Alright, so hello everyone. This might turn into a rather long video. I'm not sure how long it'll turn into because it's kind of dealing with it's a little bit of a blast from the past. In light of the markets looking like they're about to go to hell in a handbasket, I thought we should look back at 2008. And there was a story here that I had done. I believe it was on my old channel. And it was actually a story that I had found from a woman on YouTube. I believe her name was Boomer 1948 or 1949 or something like that. And I think she's a C-SPAN watcher. And she had encountered this video or this Representative Paul Kanjorski telling a story about basically what he had been told in 2008 that essentially got him to support the bailouts. And what he was trying to say, now this guy's a Democrat, but he was trying to suggest that he would have not have supported it unless they hadn't scared the shit out of him. And what I want to do here is I just want to play what it is that he said that he was told basically. And this is what he was told, by the way.
That things were done that are misunderstood. We did not give the $700 billion for the purpose of lending money. That was never in the program. It was misconstrued initially and put together with the suggestion by the Secretary of Treasury that we would be buying what we called dirty assets, defective mortgages and securities that were held in these banks, that the government would find a way to create a market, buy them in, take them off the balance sheets of the banks so that the banks could continue to function normally.
Did you support that?
I supported that, but also...
And just to clarify, he's explaining what happened in around September of 2008. I want to say it's around 18th or 19th of September 2008.
Part of the bill, we gave the jurisdiction and authority to the Secretary of Treasury to make investments in banks. He had very wide authority because, quite frankly, we're not the experts on the Hill as to how to solve this problem, and the problem is a multifaceted problem, so we gave great flexibility to the Secretary of Treasury to act.
So what would you say, though, then, to somebody who says Paul Kanjorski is supporting Wall Street but not Main Street with this latest $825 billion package now moving through the House?
They are right to this extent. Why did we do that? We did that because the Secretary... Look, I was there when the Secretary and the Chairman of the Federal Reserve came those days and talked with members of Congress about what was going on. It was about September 15th. Here's the facts, and we don't even talk about these things. On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks. They decided to close the operation, close down the money accounts, and announce a guarantee of $250,000 per account so there wouldn't be further panic out there. And that's what actually happened. If they had not done that, their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours, the world economy would have collapsed.
So now if we look down here, and I've already verified this. I remember I went over this video trying to confirm what he was saying back in 08, or it might have been 09 by the time I got to it. And he asks, because this guy doesn't understand why we haven't been told what he was told. He doesn't realize that he was being used to a certain degree, but then they probably also didn't want panic. But anyways, basically there's you can click here, I'm not going to do it, and you fast forward to the 1 hour 50-minute mark, and you'll see this man, Paul Kanjorski, asking at a hearing in which both Hank Paulson and Ben Bernanke, Hank Paulson was then the head of the Treasury at the time, and of course Ben Bernanke is still head of the Fed, are at the hearing. Kanjorski asked Paulson the very question about. I remember he basically asked him why he doesn't talk more about how bad it was, or that there was a run on the banks. That's kind of basically what he asked him, and states to Paulson that the information came directly from him. And Paulson, this is the key here, does not refute the facts. And Paulson, it's still like he doesn't want people to really know. I think he even says that he didn't want to cause a panic, was the way he put it. So I'm pretty much convinced that they were told this, and I do think the Treasury and the Fed, I think they believed it. Now, what he said there was going to be a money market guarantee to basically as a fail-safe, like insurance on the money market funds that participated in this program. Now, it's important to note that this was back in 2008, of course. Obviously, we're a little further away, but one thing I wanted to do was pull up in the U.S. Department of Treasury. You can pull up the ESF, or the Exchange Stabilization Fund, assets and liabilities. And I found it interesting because in the video here, he did say that they estimated that it would have sunk the system to multiple trillions of dollars would have been pulled out of the money market funds. And the key here is this right here. When you click on ESF assets and liabilities, it gives you a rundown as of March 31st, 2012 of this. To me is actually the true plunge protection team, or a big part of it. But I'm not going to get into that. I don't have time for it. It's really, and I don't really have the knowledge to go into it. But what I did notice is their total assets, total is like 103, almost 104 billion. But their total capital is 43 billion. And I found it kind of interesting that they were offering to, now, and it's important to note how this program works. It's like basically any money market fund that I guess participated or purchased access to it. So not all money market funds were necessarily going to be protected by it. But when they did offer this guarantee, that's what stopped the run. Okay, so it's very important to note that it did actually work, at least in a technical sense. But one thing to note here for 2012 going forward is, when does the program terminate? The program is designed to address temporary dislocations in credit markets. The program will be in effect for an initial 3-month term, after which the Secretary of Treasury will review the need in terms for the program and the cost to provide the coverage. The Secretary has the option to extend the program up to the close of business on September 18, 2009. In order to maintain coverage, funds would have to renew their participation in the program after each extension. If the Secretary chooses not to extend the program at the end of the initial 3-month period, the program will terminate. Now, I've been unable to find out if it was ever actually terminated. In fact, if you come up here to comments, you will see down here a question: has Treasury decided whether it will extend? Now, this is an old question. The money market guarantee beyond the current date of April 30th. It's now April 7th, so I'm trying to make plans. And they're probably going to pull all their money out. And of course, there's probably not going to be a response because, where am I at? Oh, this is actually U.S. News. Interesting. So, I find it fascinating, though, that, Kanjorski and what he was being told was that if they had not, I don't even understand why they went to him or why they were telling him about this, because they don't need to get authority to use the Exchange Stabilization Fund for that type of activity. The Exchange Stabilization Fund is essentially a dirty slush fund, which they can do whatever they want with. I mean, there's no oversight whatsoever from what I can tell. But anyways, their estimation is that by 2 p.m. that afternoon, $5.5 trillion would have been drawn out of the money market system. Now, irrespective about collapsing the entire economy, what they mean by that is it would have threatened the banking system as we know it. who knows what that would do after a few years, but 5.5 trillion, which is being backed up by 43 billion in total capital, to me sounds like a little bit of a problem. And even if you add all assets, from what he was saying and what he was told, excuse me, because this is what he was told, and I really do believe it at this point, 550 billion was being drawn out in a matter of an hour or two, which is more than the entire Exchange Stabilization Fund has access to. And so what I'm getting at here is either A, it may or may not even be in place anymore, the one thing that stopped this electronic run on the banks, or B, it may not have enough money to cover a run. So it's an interesting thing. And then I don't know how, it's just the psychology of it. And then we are getting back into that I get that feeling, that 2008 feeling right now. Although it's worse to some degree, because, and this is something I've talked about in the past, that we don't have the political will to do bailouts anymore like we did. I mean, can you imagine trying to push another bailout? I don't think they'll bother. They'll just print. They'll just cheat, lie, and steal. They'll just do it behind the screen. I mean, seriously, it's going to be a lot easier just to go into debt, at the ESF. Seriously, why don't they, who says they can't go into debt? It's kind of a gambling process anyways that they do. So, I don't know. It's kind of a interesting issue. And if it's one you're not familiar with, you'll be glad to hear it. But I think most people on my channel probably are familiar with it. So, this shows, though, how tenuous our financial system really is. And that a lot of times, we in the movement, we get sort of sick, or I do. I get sick of hearing about inflation, hyperinflation, and economic collapse. We hear about it all the time. We get kind of annoyed by it. But the thing I think we need to recognize is that we've already been proven right. In 2008 was it. Because both Hank Paulson and Ben Bernanke literally thought we were hours away from the entire banking system, not of the United States, but of the world collapsing. They thought it was collapsing. So Ron Paul and all of us who agree with him, we are right and we were right. And unfortunately, I'm starting to think we're going to be right again. And it may actually happen this time because I don't think they have the will to cover it up. And if they do cover it up, I think we might even get into something a little bit more dangerous. And that is, when you've got things like WikiLeaks and the internet and Drudge, they could unravel the economic system through, they could create chaos by so many hidden transactions that suddenly the world is asking, how much money has the United States actually spent? How many dollars are actually in circulation? How do we know? And of course, the Fed doesn't provide the M1 or M3, whatever, I forget the different levels. What is it? M3 is M3 all of M1 and 2? I forget. It's been a while since I've looked at that stuff. But M1 was it the amount of money in circulation, the amount of dollars in circulation. And so if you create that sort of chaotic situation to where suddenly the market has no idea what's up, what's down, what have they been doing, that's what I wonder if that's not what's going to happen. They'll print over this. They'll do some sort of bullshit loan to Greece. A country, they can't pay back their loans, and they're not going to pay back their loans, but they're going to give them another fucking loan. Why? Because, well, that's what they do. They're just going to do it over and over again. I would not surprise me if they just kick the can once again down the road, and all the while the snowball's getting bigger and bigger. And I think one of the big problems with this system is, if you remember the fat finger day where the Dow just plunged like 400 or 500 points in a matter of a few minutes, and they called it a fat finger error. And of course, it was no fat finger error. They act like they don't know what caused it. Well, it's probably just a fat finger error. Well, what if it's not? Well, it doesn't really matter. I think we witnessed that day what happens when the gatekeepers run out of power and money to keep the market afloat, and there's not a fucking thing behind it. It's all fake. It's a facade. And the moment reality hits, it completely drops like a stone, and suddenly there's nothing left holding the bag. Stocks are like worth nothing. I mean, it's comical. And part of that I know is the system, the way they do electronic trading, but that's sort of the point. Machines rule the world. So, George Furtado quit because he wanted to get out of this depression of looking at the negativity. But I, on the other hand, have not been looking at the negativity that much. So I'm getting back into the negativity while he's ejecting. But I'm not really getting into the negativity. What I'm doing here is presenting information and truth about what we experienced in 2008. And then it proves that we libertarians, Austrian economists, are and were right about what we're saying about this system. And Hank Paulson, Ben Bernanke, they proved it when they were scaring these representatives with information that they thought might cause a panic. And I do not think they were just trying to scare them. I think they genuinely thought the world was going to hell in a handbasket, and they had to, quote, act. And God help you when you hear these interventionists say we need to act. What that means is we need to stave off the day of reckoning so we can create a much bigger problem down the road. That's what that means. When they say we need to act, that means put off the day of reckoning. So that's pretty much, I got 16, 17 minutes in, so the video wasn't that long. Watch my microphone not even be working, where I've been having problems with it. But anyways, I think that's about it. So we'll see what happens over the next few months. I mean, I guess if someone put a gun on my head and said, decide what do you think is going to happen, I think we're just going to see more loans, bailouts of sorts, and maybe even a slow breakdown, maybe even a drawn out, where they try to print over it and it works for a little bit and then it starts failing again pretty quickly, and then they do it again, and then that starts to hurt the dollar or whatever currency is doing the bailing out. And then it just, you know what, it's just not working. Nothing's working. Everything they throw at it's not going to work anymore. And when it comes down, it will be epic. I mean, I haven't even got into the derivatives market. And that's really what they were referring to, I would imagine, because when you see the 5.5 trillion disappearing from the system like that, I don't know, that gets into like even the banking system and then the derivatives market. And you're talking about the extinguishing of probably actually hundreds of trillions of dollars. And so it would necessarily be the end of the world as we know it, pretty much. So, yeah. This is the evil George Furtado, the evil version, the depressed version. I hope he didn't watch this video. He's going to commit suicide. Alright, I'll see you guys later. I hope this didn't depress you. I hope you're not going to go commit suicide yourself. But, again, just more information so that you know kind of what's going on. And one thing I would recommend is come in through here. Let me pull up this link here at Zero Hedge. I'll try to put it below if I can freaking remember. It says here, presenting the Exchange Stabilization Fund in 5 parts. Is this the real plunge protection team? It's funny, the moment I read about the Exchange Stabilization Fund, I thought, holy hell, that's the plunge protection team, and it's right here. It's not hidden. They even say that that's what it's for. But anyways, there are some interesting videos here on this page about who ran it, how it was set up, how it's been used, who's run it, and what they went on to do. And it's pretty enlightening. I haven't finished all of the videos, and I don't know if I agree with everything the guy says, but I still think it's thought-provoking and something that we all need to be aware of, because we're going to be dealing with these issues probably over the next few years. So whenever we see the Dow going up on a day you feel like it should go down, who knows? Some sort of entity in the markets, IMF, ESF, OSI, CIA, FBI, I mean, who the hell knows? See ya.